blood flow's still slow.
You didn't know you were in a movie every 4 months?
I'd like to be in a movie. My father was in a movie and it won an Oscar.
Really?
Yeah.
Awesome.
Short documentary
Well, still though.
about his work.
Awesome.
Yeah, he was a social worker and
Cool.
dealt with Holocaust survivors and stuff in
Wow.
Venice, California.
Wow.
Wow.
All right, so we're
And-
report. Oh, sorry.
No, it's okay. Funding went through the roof after
After
that.
that, I bet, yeah.
Before that, it was nothing. Anyway.
All right, I am going to give Brian our annual report. One of the heady duties of being the president is I fill out the annual report for the Secretary of State, telling them that I am still the president. Leslie's the secretary, Bill is the vice president, and we do not have a treasurer. I don't think we need one,
They won't give us any money.
because we can't spend the money and we don't want to be tempted by having it. So, you have to file that with $20 and we'll be good for the year.
And that's what is it called?
It's the annual report for the Secretary of State. All corporations, profit, non-profit, have to report who their officers are, who their agent is. So if anybody wants to sue us, they know who.
Please extrapolate my name.
Excuse me, so each of those entities has to pay $20 to file their report to
Yep.
the state?
It's more than, it's 100 and something for a profit entity.
And then they do get you, like when the year that there was a change, like I got added and we had to remove who the prior finance director, they add a fee if you make a change. So it's
Yeah.
$20 every year, but if you make a change, it's like
1,700.
Interesting.
Yeah.
So many fees on everything. The town charges a fee or two as well.
too.
So, okay, so we open the meeting. We now have
9:09.
It's 9:09. We're a little bit late because we're having a technical problem, which we solved with the push of a button. And I didn't. Somebody else did. So, okay. First order of business is to approve the minutes.
I move approval.
Second.
On any questions, discussions concerning the minutes? Hearing none, all in favor?
Aye.
Aye.
Ayes have it. Next order of business is the advisor's report, so unless we have something else, we,
Brian, what's Cassandra's last name?
Tetley?
Tetley.
Tetley?
Tetley.
Thank you very much.
Sure.
Tetley, I guess.
G, right? Tetley G.
Yeah. We'll find out. Might be a good person to know. They'd be free now.
We'd have to file.
True, good point.
Welcome to the audio conferencing center. Please enter a conference ID, followed by pound.
Oh, shoot, wrong number.
Sorry, I can't find a meeting with that number. Try entering your conference ID again. If you're meeting organizer, press star now. You are now joining the meeting.
Please wait for the leader to admit you to the meeting. Thank you for your patience. You are now joining the meeting.
Good morning. Morning.
morning.
Good morning.
Morning.
So we have the full committee here.
Who's on your end?
Excellent. On my end, no more Bob and Brew, as we know. But joining me is Kathy Tetley. She's going to be the relationship manager on this account. And I also have Tim Smith, who helps with administrative and fiduciary duties with the account. So they're going to be joining this call, and then hopefully for our July meeting, we'll be able to meet in person as we do each year.
Sounds good?
Was
Yeah,
that Tim
sounds
or
good.
Jim, Lucas?
Tim.
Tim,
with T.
thank you.
Tim with a T.
Tim with a
Well,
T, thank you.
welcome, Kathy and Tim. We look
Tim with
forward
a
to
T.
seeing you personally. But
Do you want to introduce ourselves before you?
Oh, sure.
Yeah.
yes, this is Terry Simpson. I am the president of the board, and that next is
William Rosen, I'm the vice president.
Leslie Perini, secretary.
Elaine Gillum.
Ben Engineering.
And Brian Sylvia, not on the board, I work for the town.
Hey, it's very nice to meet you all.
And you.
Okay, so at this point,
If
we
there's no questions, I'll kick it off with the normal process.
Yeah.
sounds good.
Talking about the economy and markets, and then we can get into the portfolio. So,
Hey, Lucas,
Our last
can you incorporate, just the markets have been very volatile, and so we're looking at March 31 statements. And to just give everybody a perspective of where the portfolio might stand now, could you just incorporate into your remarks, what the markets have done since March? So we have a little bit of a perspective on the whipsaw that's gone on.
yes.
Thank you.
So, I'll begin there as we often do in these meetings. We let you know what the current balance is, and obviously March was a very challenging month because of the invasion of Iran. Energy prices shot up, and that impacted both stocks and bonds. As you can see, for the quarter, relatively benign. I'll get into that. But since the start of April, the portfolio itself is entirely reverse course. You see it was down about 1.8%. As of the close yesterday, the portfolio is up 3.4% year to date, and has a total balance of $27,550,928.
Bounce back.
So much like the tariff tantrum and taper tantrum, the markets sell off pretty strongly and then rebound quickly. And, it just goes to show that, market timing is difficult, and that if you don't like the performance in one month, wait till the next month, because oftentimes it's the opposite. So as you can see, we stayed the course, and now we're well into the green, despite a little bit of a pullback yesterday. But the markets have been really volatile, very responsive to news. It's all about the conflict in Iran, and not many people in the world knew what the Strait of Hormuz was. Now many people do. And we're obviously all tracking, us in the investment world, we're tracking tankers through the Strait of Hormuz to try to get a sense for the direction of energy prices and the direction of this conflict. But for the time being, we're trying to look through this conflict. These things happen. We get surprises. As I talked about at the start of the year, we were very optimistic because the economy was strong. We were likely to get some rate cuts. There were 3 rate cuts forecasts, which would have been a decent shot in the arms to the markets and would have helped bonds, we believe. There was talk for a period as oil prices were inflated that the Fed may need to hike rates to try to control inflation. That seems to be off the table right now, and most forecasters are forecasting just 1 rate cut this year instead of 3. So things can change, and certainly some of the CPI numbers that include energy came in hot and are probably going to again come in hot for March and April. There's not a clear pathway down for oil. it sounds like, much of the damage has been done. It's going to take a while to get back online and fully operational and have full flow coming out of the Middle East. So it's something to watch. But again, as I said, from an investment standpoint, we try to look through that information, meaning that in the short run, we know there's going to be volatility, but the underlying fundamentals of the economy and the market remain very strong. Earnings are still strong. Unemployment is holding in there. So the employment picture still looks good. And, we're probably not going to get as much growth as we expected out of the economy. But the economy is still growing, and that tends to be a positive for investors. I'll pause there. Any questions on the market, where we've been, and where we think we might be going?
No, I think you've been probably pretty complete in that description.
Yes. So,
Okay.
yes, lots of questions, but we understand there are no answers.
Right. Yeah. I mean, it's a period of time where there's a lot of disagreement. Sometimes that's good. The one thing I will say, and we talked about this last time, is that we still continue to see breadth across the markets. Small company stocks have done well. International stocks have done well. So it's been a good time to be diversified, and that's helped protect the portfolio as well for the quarter. So I'm gonna turn to the performance report. The numbers are labeled, so the pages are numbered. So I'll call out the page number. We typically begin on page 2, just to get a sense of the very broad asset allocation. You can see our equity weight is slightly overweight, target of 60, but we're at 61.8. The portfolio for the quarter lost 1.84%. Many of our clients are quite surprised at how little they lost, and many of our more conservative clients were flat or up. So again, diversification helped, and we were able to minimize losses for the quarter. Shifting over to page 3, this is where we break down the asset allocation. As you can see, we've drifted, and I've also added to international stocks. So with appreciation plus further investments, we're actually 1.3% overweight international stocks. It's about 0.7% for developed and 0.7% for emerging. So, as you know, for almost the last decade, this portfolio has been positioned towards U.S. growth. But over the last year, we've somewhat transitioned away from that, and we're now a bit more diversified than we were. And we think that there are, the times are changing, and it makes sense to make some adjustments to the portfolio. None of these are excessive overweights. As I said, we typically do these things gradually. Moving again down the list, you see that on the fixed income side, we remain underweight. We're not sure of the direction of rates here. Rates could go up, rates could go down. It's been very difficult for many of our bond managers, the bond experts, to predict interest rates. So again, we've been a bit cautious with our fixed income portfolio. Onward to page 4. Not really any changes here. You do see that our allocation still has a slight overweight to growth. We use the Fidelity Contra Fund, and he tends to be a growth-oriented manager, and we leave the stock selection up to the folks at Fidelity there, and right now they're tending to still be overweight growth. Growth did stage a pretty strong recovery. However, it was the one that fell the most during this downturn. So it's again good to be allocated across various sizes and and value versus growth. Page 5 gives us a breakdown of how we're allocated. You see that we're using a lot of exchange traded funds in the portfolio. These are, they trade daily in the stock market, unlike a mutual fund, and they tend to have very low fees and oftentimes track an index. So they allow us to have some precision in our asset allocation. Moving forward to page 7. This is our detailed breakdown of performance by sector. But starting across the top line, you see the total portfolio. As I mentioned, it's now well above 27 million, and it's up 3.4% year to date. So we've seen a 5% turnaround there. One thing I do want to point out is that in the quarter, again, a down market, it's good to see that the portfolio lost less than the benchmark. This helps demonstrate that we're not taking excessive risk to generate our longer term outperformance. We're using diversification to our benefit. Moving down the line of performance, a couple of bright spots in the U.S. equity portion. The small cap fund was positive 2.33% for the quarter, beating the Russell 2000 index. So we're beginning to see this manager recover. As you may recall, we selected a manager that screens out unprofitable small cap company stocks and focuses on more value-oriented stocks. So we're seeing those rebound. And then also, our modest allocation to REITs. REITs were up for the quarter. So that helped again on on the equity side. All the way down to emerging markets, you see that, adding that position, we had a positive 4% return for the quarter. So international certainly helped out because the international portion of our portfolio was up for the period. Looking down at fixed income, the Barclays aggregate, which is the typical benchmark, the second line there, slightly down for the period. We were slightly up in our fixed income portfolio. We had less interest rate risk. One of the things that I did add or a few things that I added, actually I'll move on to the next few pages to talk about what I added and what changes we made in the portfolio. Any questions on performance?
No, I think we're good.
Okay. So beginning on page 9, we show the performance or growth across different funds as well as our additions. So on page 9, you see that during the quarter I added $100,000 to the MFS International Diversification Fund. This is largely a U.S. developed market international holding. Also added
Lucas, excuse me.
emerging markets.
Lucas,
Yes.
excuse me. This
Yes.
is Elaine. Just have a question before we leave that. So why are you using that versus something that's more index-like and maybe cheaper? I'm not sure of the cost on that. I'd have to find it. Is there a reason?
You talking about the MFS?
Yeah.
This is a legacy position, so we've worked with this manager for many years. We are internally having that discussion whether or not we should be using similar to what we're doing in the emerging markets.
Right.
with these core iShares funds. So yes, I'm in agreement. As I kind of started out with, more and more we're transitioning our portfolios to low-cost exchange traded funds.
Okay.
And so yes, that would be an area where we would consider making that adjustment.
Great, thank you for that.
On page 10, you see this Wisdom Tree floating rate treasury, USFR. I reduced that position by about 500,000. This essentially is a fund that yields roughly T-bills plus a little bit because of the floating rate nature of the funds. And it's a very defensive position. So in rebalancing and adding a little more risk and yield, I pulled from the Wisdom Tree floating fund as well as the JP Morgan Chase CD and reallocated to a high yield bond fund. That's the iShares, so that's an index fund ETF. I also added to an emerging markets debt fund. So we had no position in emerging market debt. I added to that to give us a little bit of exposure in our fixed income to EM debt. Yields remain attractive, and again, as the emerging markets perform well, it becomes easier and easier for them to service their debts. So again, modest allocation relative to the whole portfolio, but we initiated that last quarter. And then the other small allocation.
Hang on one second, Lucas, Elaine again, sorry.
Yes.
So you bought the MFS Emerging Markets Debt Fund. So could you just maybe tell us why you chose that fund?
There are two funds on our approved list, and this is one of them. So it's one of our go-to funds for gaining exposure to the emerging markets.
So just so the committee here understands that, I understand it, but so you have an approved list that has two funds in that category, and your analysts who produce this approved list meet with these managers and regularly?
Yes. So we have at least annually a call with their investment team, and then we analyze performance in our quarterly investment committee meetings. And so we add managers to our approved list, we remove managers from our approved list, we put managers on watch list. Again, if we're looking for a particular exposure, typically we have a manager in our stable, if you will, that's approved.
Okay. So thank you for that. And just to go back to my prior question about those MFS funds, so the cost, just so you know, is about 0.82 and 0.83 for both the International Diversification Fund and the EM Fund.
So ETFs would be
Yeah.
0.04, 0.06.
Right, versus an ETF cost, which is probably 0.04 or 0.06 annually.
Yes, for international, it would be 0.06. International equity, we use the iShares fund. I think it's 0.06. And then Vanguard has a very low cost emerging market debt fund. I know not to get into too much detail, but this MS emerging market debt fund, it combines bonds denominated in local currency as well as in US dollars. There's not an ETF that I'm aware of that currently does that, but we could buy two ETFs. The reason I didn't is because we don't necessarily have a view whether you should own U.S. dollar denominated debt or have the currency exposure to these emerging economies. But Elaine, you are absolutely correct. There are lower cost ways to gain these exposures. And it's something we talk about regularly.
Great, good to hear. So we'll see, what the future brings.
Right. So I guess that just means that they're worth the extra money.
Well, that's your hope. Your hope is that it's hard to outperform any market, and these are active managers versus there can be ETFs that are passive, meaning they just you get the return of the market,
Yep.
whatever segment of the market you're in. So your hope is that this fund will outperform
The average.
after fees, right? After fees.
And this is one of two, so why this one versus the other one, I guess, or?
Well, I think they have an approved list that, and I think there's some conversation, correct me if I'm wrong, Lucas, conversation within Webster of using vehicles that have lower costs than they're currently using. The beauty is that this fund is not taxable, so they can do anything they want. Like, they can sell the MFS holdings with no consequences and purchase something else. So if they decide to move out of the more expensive funds into something with a less costs, then it's easy to do.
Not taxable.
Yeah. And, again, the majority of the purchases that I pointed out, we're going to index funds or ETFs. And on page 11, you'll see one more. We added back to the portfolio. We had fired an active manager that managed convertible bonds. We looked for replacements and determined that the exchange traded fund did a very good job of delivering the index at a very low cost. So that's ticker ICVT, page 11, added about $200,000 just to add some diversification across our fixed income portfolio because none of the other funds hold convertible bonds.
Okay.
And that's more or less the quarter. Some modest changes to the portfolio. The portfolio held up well, and it's recovered nicely thus far in April.
And Lucas, where are we going now in the future?
The crystal ball.
The crystal ball is hazy in the short term, but long term, we're still pretty optimistic. There's a lot of momentum behind artificial intelligence, a lot of innovation, and a lot of spending that should boost the economy in the short run. But it's very challenging to pick the winner. We've probably all read a lot about artificial intelligence, and it's not clear whether or not all of these investments are going to pay off for the companies that are making these investments. But it's becoming pretty clear that AI is going to change the world. It's just probably in ways that we can't even imagine right now.
Some of us think that artificial intelligence is way too artificial.
That's the entry on AI.
Well, we haven't started writing our commentary with AI, so we still write it with our own words.
I know it's a very hazy picture right now. So
Yeah.
we'll get through it.
It's
We'll
only
get through
Improves
it.
every day.
An inflow
Yep.
and an outflow, 166, 135.
Any more questions for them with regard to their report on the performance?
Not really.
Next on the agenda is other matters.
Are we gonna send them
Yeah, we need to
Send them.
pick a
we should
date.
set the date. Yeah.
Well, send them
No, but are there other matters with regard to them?
Webster. Oh, you want to
with
ask your
regard to
questions
Webster,
on the
anything else with
IAF?
reporting or,
They're the way.
I know, I think it's Brian question.
Oh, okay, okay.
okay.
No.
No, I guess not. All right, so a new date.
Okay, so we're April, May, June, July. Somewhere between the 15th and the 29th, depending. I'm away from the 26th on, so
How about the week of the 20th? Is that too
22.
Can you guys do
22 works for me.
July 22nd? You're coming here, correct?
Oh, that's right, yeah.
Yep.
Yes.
Okay, so the 22nd at 9 a.m. in person.
Yes.
And your beach bungalow will be ready.
Yeah, I
Yeah.
was just gonna
Yeah.
say, you guys should make a day of it and go out to lunch and, you know.
Yeah. Or a weekend.
Yeah, it's pretty up here.
Yeah. No, Ed used to always stay the night. I stayed with him one time. We had a nice dinner at the Coast Guard House.
Oh, there you go.
There you go. You're living large.
Yeah.
Yeah, that's
Webster
good.
bought me a dinner.
Thanks, Webster.
You'll
Yeah.
you'll have to get up early and get your Rhode Island guy donuts.
Yeah, oh
Yeah.
yeah. Maybe if you're good, we'll bring you Rhode Island Guy donuts.
Forget Duncan, Rhode Island guy is. the
Duncan's
guy that
garbage.
goes to-
Yeah.
We should bring him donuts.
We should, yeah.
Yeah.
All right, well, thank you very much.
We'll see you then.
Nice to meet you both. We'll see
Thank
you
you. Take care,
in a few
everybody.
months.
Bye-bye.
Thank
Bye.
you.
everyone.
Yep.
Bye-bye.
Bye-bye.
You know, as I sitting with talking in the market and I guess sort of high-end stuff, all of the shootings that go on, you know, we talk about Iran, but that doesn't seem to affect the market
Well, the
much.
market likes war, so as long as we're in a conflict, American companies are making money, so.
They don't care if we shoot each other
No,
in schools.
no, it's
and
more gun sales.
churches
Yeah,
and-
yep, yep. Yeah,
It's perverse.
Amazing.
it really is, yep. Bad things happen, the market goes up.
I know. I mean, you see every now and then on the nightly news the guy standing on that podium, wherever it is, ringing the gong in the market, and they're all, yeah.
Yeah, they
And the
don't,
next thing is, 8 people shot.
yeah, they don't live in the real world.
Yes.
Yeah.
All right.
Oh.
Any other, what's this quick one? Other matters today?
Forward, how much money are they gonna take out this year for scholarships? What is it, the?
Spend down, the draw, right?
Yeah,
It was
it's
five-
500 and.
whatever the
1,000,
income
I
is,
think,
yeah.
Yeah,
I
mostly
haven't heard
for the
from them
guild.
yet. Yeah.
But mostly for the guild.
Oh, well, not the guild.
Not the Eustace.
The other funds.
The other fund.
Yeah.
Oh, the
Remind me, we took a lot of money out of the NGIA,
Yeah.
correct? I'm like, where's the
That's the
$1
one we let
million?
Terry
Yes,
have it,
yes,
right?
Yes.
How much did she take?
Good. They were renovations for something,
Yeah.
right?
Yeah.
They were redoing the opening of the building, and I
Yeah.
know they're doing new windows.
Mhm.
and,
This is the neighborhood guild.
Yeah.
Yes.
Yeah.
We had
There was probably some more.
accumulated cash.
Yeah.
and-
They're doing some of the parking lot work at the same time, but that's not coming out of these funds. They got
Mhm.
ready for that.
Mhm.
Got it.
But,
Good.
yeah.
Elaine remembers that fund being much bigger.
Yeah, it was
Was
like-
it $1 million at one point?
It was
Yeah.
a million or slightly
111,
over. Yeah.
And did we
1.1.
really
Yeah.
spend that much? I mean, we only have like 97,000.
Yeah, that sounds about right.
Yeah, I
'cause
think
it
we
was
get
about $1 million.
$800. Yeah, that we gave
close-
them.
Yeah, yeah.
they were. I remember
Wow.
that last
Yeah.
summer we talked about it.
I remember she was here, but I don't remember her
Yeah.
asking for that. I'm gonna speak to her about this.
But
Because I
a
think
lot of
they
that
take.
was
I'm sorry.
improvements, right?
Yeah.
Yes.
Yeah.
And connected with the bonds and
Yep.
all that.
Their normal operations, some fluctuates each year, but
Yeah.
approximately 350,000, and then that was that
Mm.
was
It
really-
accumulated over the
It did,
like
yeah.
a long
Right, and they
time.
needed
I hadn't
it,
taken
yeah.
anything in a long
Yeah.
time.
Yeah.
I think we normally take 3.5%. And
Yeah.
she doesn't always take the 3.5%. So
Right.
It accumulates there.
Right.
Yeah.
I feel poor looking at that account though.
Yeah.
Yeah, they've done a good job. Here, so for the record, I have noticed in this call that Lucas is now, the older folks that have been managing this portfolio for a long time have left, and
Yeah.
he is exerting his influence.
Yeah.
Yeah, I mean, honestly,
So-
just in the industry, like mutual funds to me, I
Yeah.
haven't used them in barely ever in
Correct.
5 years. So they're, expensive, and if you hold it up in a comparison portfolio, your ETFs beat the bank. Even though they're passively managed, you're always going to have more money because of the low cost.
Right.
So if we're paying 0.5% to Webster and then we're paying 0.83,
to these MFS mutual funds.
And I would argue no, because I'm very familiar with MFS, but we'll see.
Yeah, we'll see.
Yeah,
So,
we'll see.
I think we got our points across
Yeah,
and,
yeah.
and
I mean,
they
'cause
were
if I'm
already
paying
thinking about it.
1.3,
Yeah.
I want, you better
Yeah.
be making 8,
Yeah,
you know?
exactly. So,
Yeah. Yeah.
but I thought the meeting went well. I thought Lucas's presentation skills had improved also.
Yeah, yeah,
Yeah, I thought-
Certainly, I noticed that.
yeah.
Yeah, like,
Yeah.
so, great. I'm very,
Well, he's not in
encouraged.
everyone's shadow now.
Right,
either,
exactly.
So
That's
he
He
can,
was second chair for a long time.
right,
Right.
or third chair when Ed and Bob.
Well, he was brief, he had page numbers, he
Yeah.
hit the relevant points that I would have hit in
Yeah.
a presentation.
Yeah, I thought
So,
he did a good job.
Yep.
Yep.
Other matters?
What's on our thing here?
Old business, next meeting, other matters.
Business.
Nothing in
What
particular.
date did we pick? July? what?
July.
July
22nd.
22nd, in person at 9, you get the donuts. No, just kidding.
Hey, where's this donut place you're talking about?
You don't know Rhode Island guys?
The old Bessie.
Don't act so coy. You have
Used
had a
to
Rhode
be.
Island guy.
No, I haven't. I don't
Really?
know. We haven't eaten donuts in 30 years.
Oh my
Okay.
poor you, you missed out. Right across from Belmont.
A lot,
We'll bring
a
them.
lot healthier to be like I am.
It is, it is, it is. You know what, I'll serve you with a side of hummus, okay?
Yeah, eat the protein first and the carbs.
Jelly
Where is it?
donut and the hot.
No, it's right by, across from Belmont.
The old,
Oh,
old
okay.
Bessie.
Yeah, yeah,
right
the old
there,
Bessie,
Four
yeah.
Corners.
We'll
They
bring
started
some.
it on the campus in the Emporium.
Yeah, they did.
They
Went into the bagel shop.
They left.
Alley's. They went, a couple, I don't know how many of them left and went,
Stole the
Oh, I know that
recipe.
story.
took the recipes and doubled the size of the donuts.
Huh.
And,
They're
they
mammoths.
changed
I've
things.
had them. I didn't know that was the order.
That
of it.
recipe is less sugar than the
Okay.
Alley's. And actually, the Alley's recipe came from Belknave's. Remember Belknave's Bakery in Peacedale? The Belknap family? That's where that Alley's recipe came from, was a Belknap family in town here. Yep.
Huh.
It goes back a long time. that
Rhode Island
recipe.
stories.
Yep. I remember the bakery in Peacedale, going in as a kid. Yeah? What about this? We're not gonna talk about this, we're just gonna have it.
Well, we'll see what's gonna happen next quarter.
Okay. All right, that's what I would do.
All right, is there a motion?
Move to adjourn.
Second.
You
Any
guys are in a
discussion?
hurry.
All in favor?
Apparently not.
Meeting's ending at whatever.
9:45. Wow, that's a record for us.
I know, I don't know what I do with my morning. I got something in.
Yeah.
Oh, because Ed is not around.
No, I can't.